Hello, this is Les Goldstein. I want to welcome you to our October 2018 Educational and Economic Update. Well, it does appear that this aging bull market is finally starting to slow down. However, according to a recent article in Barron's, America's money managers are confident that the bull market can continue into 2019. According to Barron's All Big Money poll, 56% of professional investors are bullish on stocks, little change from the 55% who were bullish in the spring of 2018. The mean predictions from this big money poll put the S&P 500 up about 10% by the middle of 2019 and about 13% by the end of 2019. Most managers interviewed by Barron's for this article say that the recent sell-off is simply part of a normal correction. According to one source, corporate earnings continue to grow nicely and stock valuations are not out of line. Again, according to this same Barron's Big Money poll, only 9% of these professional money managers are bearish, 56% are bullish, and 35% are neutral on U.S. stocks. It appears that the greatest positive driver of this enthusiasm is this group's outlook relative to corporate earnings. 83% of the professional money managers polled believed that corporate profits will rise between 6 and 15% in the next 12 months. This certainly is a positive sentiment. However, the very same poll says that the greatest threat to U.S. stock market over the next 12 months is rising interest rates. 28% of everyone polled believe that that's number one, followed by political missteps with a 21% threat. It's also nice to read which major stock market will perform best over the next 12 months. 42% of the analysts in this Barron's poll selected the U.S. market, which is led by the S&P 500, followed by 29% of professional money managers selecting emerging markets, including Europe. China and Japan do lag behind these other markets. From an October 17th economic update by Regions Financial, and also reported in Barron's, housing starts are slowing. 96,600 housing starts were issued in September, which was below Regions Financial's forecast of over 110,000 housing permits. There will be sizable declines in both single-family and multifamily permits, and this marks the lowest monthly totals since February of 2018. Slow housing starts can be attributed to rising interest rates, weather disruption primarily in the South, as well as a sizable backlog of multifamily units currently under construction. On top of recent challenges here in the U.S., emerging markets in places like Brazil, Turkey, and China have also suffered very badly. The benchmark MSCI Emerging Markets Index is 23% below its January high after rising 34% last year. Emerging markets are trading now at steep discounts to U.S. equities, and maybe now is the time to do some bargain hunting overseas. Of course, there is always risk in every single stock and bond and mutual fund and ETF investment, and the risk is often higher in emerging markets. After a fantastic run-up, Chinese internet giant Alibaba has sold off sharply this year, down anywhere from 25 to nearly 30% over the last 12 months. According to a recent article by Richard Sneller, this company is probably the cheapest company in the emerging markets. According to Mr. Sneller, Alibaba is the biggest games company in the entire world, second biggest in instant messaging, and the number one payment platform in the world. Even with all of that, this stock, Alibaba, is down over 20% over the last 12 months. So, To summarize this month's economic and educational update, there is no such thing as a free lunch when we talk about investments. There is always risk. Most importantly, we want to have a financial plan that is written and clear so that we follow its rules and its guidance over the years to minimize the impact of the volatility of our retirement income lifestyle. Maybe these type of assets, the most volatile ones, get put in the back of our spending pattern, either inside a Roth IRA or as a legacy asset to children and grandchildren. As always, thank you for the opportunity for sharing this monthly educational and economic update with you. We look forward to seeing you soon. Les Goldstein saying goodbye from the team at PFS Wealth Management. Thank you. And now for our required disclosure. While we believe that the information contained herein is accurate and reliable, we cannot guarantee its accuracy. Opinions are subject to change without notice and are not intended as individual financial advice. Please consult with us before making any investment decision. Thank you.